Welcome back. Happy Labor Day. Hope you didn't work too hard. This is your 1 hour of market mastery for the week to set you up for the entire week ahead so that you can make money week in, week out. We are going to cover the SPY, give you your options trades for the week. We are going to talk NVDA antitrust. What does that mean for the stock moving forward? We are going to talk about the sell-off on the SPY today and what we should look at as far as macro conditions moving forward. We warned you about September. We've told you every week this could be a brutal month. We're going to get right into it. So welcome back. I mean, let's get right into it. SPY sell-off today. We saw a pretty strong move down. I'll get this pulled up on the chart. We'll get right into it. SPY cratered. If you played our levels, you made a lot of money today. The sell below 559 going puts, we already outlined the trade for you. You got a $10 move to the downside. That's over 100% on that intraday trade. So I hope you locked that in and made your money because that was a stupid easy trade. As you can see, it played the levels perfectly, gave you a secondary entry opportunity at 555, boom, all the way down to 550. Again, playing the levels perfectly, a couple 100% on the table today. I hope you guys took advantage of it. What are you seeing here on this tape today, guy? I mean, this is pretty brutal.
I've been very vocal the past couple. I'm probably in the minority of how vocal I was about there's going to be a pullback, mainly because a lot of people, like when we're like 1 or 2% away from all-time highs, like how can you be bearish in the market? Again, my style of investing is I like to be the first mover of first one there ahead of a major move, and sometimes I'm a little early. And I shared in my Discord group, like I bought some fat, like a 4% position on SPY puts expiring in December, $500 strike. That just shows like I am protecting my year-to-date gains. And the reasoning for that SPY put protection was the yen carry trade, V-shaped recovery on thin volume after the first 2 days. I was like, oof, I don't love how accelerated it was. And then the VIX hit a 14 handle. I was like, I think this is way premature. We had a technical breakdown from yen carry trade. Yes, that was technical, not fundamental, but we're entering a severe seasonality weakness period in September and October ahead of an election year that nobody knows who's going to win. And the market's up 18% already. I was like, this feels like is a near-term top when NVIDIA could not surpass 130, and NVIDIA is the leader of this rally we've been on. That was the tell for me. I was like, I think we're going to have a pullback. So I got a 4% position, SPY $500 puts. Those positions, wild. Ups. I texted us like an hour ago, like they were up 76% in 1 day.
Boom.
And we have time still. Like this is expiring in 3 months, and it's up 76% in 1 day. I did trim 25% because again, it's a protection and a hedge. The VIX is a 20 handle. That was my thesis. One of my thesis on why I bought the protection. It was like, I think it's gonna go from VIX from 14 to 20, and that alone will be a 30% increase in my option profit. So I'm capturing that in, but I still held some on the table because I don't think it's over. I think we're going to continue pulling back. And this 2% down day today, if you see all the FUD on Twitter and on media headlines, like you think it's the end of the world, but really we're still 3% away from all-time highs. Like there's still room for this to pull back even more. And I'm holding my position, but I do think I could see like a lot of the month of volatility for September could have been accelerated. It's happening a majority of it today. So I don't anticipate multiple 2% down days. I think a lot of people front ran this move first day of September. They want to take some chips off the table. And it was a repositioning. It wasn't like every name in the market was red. It wasn't the case. A lot of the defensive names were green. That indicates to me a lot of money came out of tech, getting repositioned towards defensive as we get through the seasonality weakness period. And that's what occurred today. We'll see tomorrow, but I do anticipate somewhat of a bounce because it feels this is a no news type of red day. It was based on seasonality weakness, and I feel like we could see some consolidation. The VIX can start going back to 16, 17. That could be the case, but hopefully you guys participate in that trade. It's wild. A 3-month out hedge went up 70% in 1 day. If you participate in that trade, like I would take some profit because the whole point of a hedge is protecting your gains, and then you reallocate those cash towards your higher conviction names. So yeah, that's what I noticed today, and I think it's healthy. It's purely technical. And to look at the chart, where am I thinking the near-term SPY bottom will be? very, very vocal for months now that my favorite indicator is a 21 EMA on the SPY weekly chart. And at this point, that is at 535 to 540. And right now, the SPY closed at 552. So I could see another 3 to 4% correction, but that will be absolutely healthy. And I will be participating on using some of my hedge money that I have into my higher conviction names once we hit to that level. And I have my game again, like we've been very adamant about this. Like, if you have a plan, you know what stocks you're going to buy, and entering is highly volatile period. If you know what you're going to do, these kind of days, you're level headed, you're a technician, you're not going to be fear driven on any of your moves because that's when you lose your money. This is a time where if you're a long-term investor, these next 6 weeks, this is your time to shine. This is your opportunity to get that alpha. And you can't be sleeping at the wheel and missing on these like insane moves because these dips have been getting bought. And when they have been getting bought, it's been extreme and very quick. So you need to have a plan. And as soon as like you feel sense the blood in the water, the SPY is at 535 or 540, like I'm pouncing and I know exactly what I'm adding.
Yeah, no, I couldn't agree more. And I mean, we've mapped these levels out. I mean, this is not, guys, none of this should be new news on any of this. I mean, it's pretty, this is like pretty standard stuff. I mean, again, we map out all the levels intentionally. So, okay, if we break below 555, odds are we're going to 550. Okay, cool. I can craft a trade around it. We even give you the damn options trade so that you can take advantage of this. Now, to Shai's point, macro market wise, if you're holding a very tech centric, so if you're holding the Palantirs, the NVIDIAs, the Apples, like a tech centric portfolio, you got to have hedge. Otherwise, you're just getting these huge, $20,000 drawdowns. Even if your account's only 10 grand, do you want to see, a $1,000 drawdown? I don't think so. Sorry.
That's you.
You don't want to see that drawdown. And so this is how you counter that move and protect yourself so that you can put a little money in your pocket when the market is selling off. That's the beauty and the benefit here. So I mapped out a couple of things here. We're going to go into the SPY. We saw on July 23rd, moved 557 down to about 537, right? So that's 3.5%. Then we saw 554 down. Excuse me, I did not draw that correctly. We saw a 4.68% down move. Oh, I totally forgot. That was the major drawdown day. So excuse me. We need to map out what downside we saw so that we can understand what kind of downside is realistic to expect. Sorry, that was an 8% move. That was our yen carry nonsense, right? So had this played out as it should, we would have probably gone 539 and then turned back up. We didn't, because that would match this move almost to the letter, about a 2.5 to 3% downside move. Because then if we move over here to the upside, once we traded above 539 again, breakout, we only saw 2.67% the upside over those 2-3 days, eventually going to 562. So I say all this to make a point. The SPY will abide by a certain set of rules, and it's typically within a 2 to 3 day period, you will not see more than a 3% move, up or down. This was an outlier, so we throw that out. And we imagine that didn't happen. That puts us trading right around 540 and then back up. Same thing happened, right? Except you didn't get this unbelievable opportunity to enter good names at the right price. Knowing that we're getting that range-bound drawdown of 2.5 to 3%, we should expect to see the same thing from the top here. And if you look, right around the same percentage. Now, does that mean we're going to see an instant rebound and upside tomorrow? No. I did add that small lotto kind of swing position to capture it if we do see it, because I am hedged. But we could also realistically see another 2.5, 3% down, which puts us right around 540, as Shay and I were discussing, 535, 540. This is the range. Notice how this line's a lot thicker than the rest, because that's a pretty critical pivot point that the price is going to want to move back to before we see upside. So looking at this from an options trading perspective, let's get you set up for the week. So here's what we saw today. We're on the 15-minute chart. We're going to use that or the 30-minute. This is intraday strategy, right? If you're on the 30-minute or the 15, this strategy applies. We're already at the bottom of our range right now, 550. Now, should we go lower, then we're going to see the next bottom, which is about 539. It's a bigger gap, which means we get a huge swing to the downside and make a lot of money. If we hold up here, we're going to aim for 555 to the upside. So if the market opens tomorrow and it opens up hopefully flat between 550 and 552, the 555 calls should pay intraday. We should see it as high as about 556, right? There's an easy 20-30% move right there. So the question is like, how do I know it's holding up? Well, you already got a confirmation here of support. You would like ideally to see the same thing at the open. You want it to test that 550. If you get a 15-minute candle that tests below and then closes above, meaning it fought off the attack, that would be my entry. Because of how the volatility's been, I'm likely going to go 2 weeks out. I'm going to cut it down a little bit, and I'm going to take those 555 calls for an intraday trade as we retest to the upside. We're probably range bound. So if we don't see the bottom fall out and we sell off, we're going to stick in this range. It's an either or scenario right now. Either we stick in this range and we go ping pong, up, down, or we sell off and we find a new bottom. So of our trades on the SPY, for those of you trading options, 555 call, 2 weeks till expiration. We are going to look to add this at confirmation of support, a retest, right? We already got confirmation. We want to see a retest, which means your 15 or 30-minute candle is going to come below and then pop right back up and close above that level. Now, if we enter this bullish trade, right, and let's just say, hey, it's not going as intended. This is not good. We need to get out of this trade because it's not playing out. Let's say we get our confirmation here, right? But then all of a sudden it pops a little and then comes back down. That has violated our confirmation, and thus we are now on the bearish train. If we flip to the bearish train, here's what we're going to do. We are going to go, I would like to go personally, 546 puts, so about $4 to $5 to the downside. Again, 2 weeks until expiration, 546 puts. These should easily pay out through this range. We got a lot of liquidity right here, which means the price can move very fast through that range. So we want to take this trade to the downside. Now, here's where it gets fun. If we start to dig around right here, right, it might test to the upside. I'm going to continue to hold a small portion of this in the event that we see 540. Because I think this is very similar to what we could see in the price action. If we model this against what we've seen in the past, drawdown, play pretend, we're going to, again, the dead cat bounce, and then more downside. I think we're going to come down. We'll be in the money on those puts, dead cat, and then I think we very likely could see more downside to 530. I am only going to swing any of this if it is in the money. If it's not in the money, I will not be swinging this, which means holding overnight for a multiple day period. If this setup plays out as I think it will, this will be a multi-bagger. Because again, 539 is that key pivot, but we've already proven in our weakness through that yen carry trade deal that we can go as low as 507. We've already proven that we're willing to violate this 540 level and drop another 5 to 6 points. So keep that in mind. Again, above 550, bulls are in control, but we're range bound. We could still make money 550, 555. Below 550, bears are in control, not range bound in the same sense, different range. Downside is more appealing to 545 and then below. So again, that would be, I think I said the 546 puts, 2 weeks till expiration. Those will pay out handsomely. That's what I'll be looking to trade. There's your analysis for the week. Again, for like 52 weeks in a row, we've had at least one of these trades hit for 30, 40, 50%. All I want to do is set you guys up for success. This is how you do it. If you want to come watch us trade live, again, the link's at the bottom. You can watch these play out in real time, get a lot deeper insight on Shay's picks, I'll tell you that much, and just stay ahead of the market. So what do you think about those option trades as far as levels and what you're seeing macro?
Yeah, I mean, I do love that thesis for sure. I do want to, like, if we have another red day tomorrow, I do think it's going to get wonky. I think it's going to be pretty like wild how aggressive the moves will be. But I want to reiterate, like, this dip that we're going to see will be a buying type of dip. It's nothing to be purely fundamentally wrong with the market. my thesis is we will hit new all-time highs by the end of this year. It's just going to be a bump, and any kind of severe dip will be a buying opportunity. And if you miss out, you're going to be missing on a pretty insane, and my 2 cents, an insane end of year rally once we have a blow off top in the market after the election. So if you missed out on the hardware semiconductor names or the AI winners this past quarter, a lot of those names who gapped up, they're probably going to refill that gap, and it's going to act like those A+ earnings that they've experienced like didn't really happen. That's, in my opinion, those are the buying opportunities. No, like, don't try to catch those falling knives who are getting new lows, retesting new lows, or like specific industries that are just like have been struggling for years, and you're trying to do a turnaround. Like, don't put your chips on those kind of names. Have your chips on the names who've proven they are winners, and they're going to get scooped up because all the money that's on the sidelines, which is still a ton of money on the sidelines, trillions of dollars, they're going to go towards those kind of winning names rather than trying to find PayPal in the 60s to have a bounce play in 80. Then we'll see where they go from there because they're undervalued in an industry that's all these names are undervalued. Instead, it's going to go towards like the Palantir, which is the clear AI winner in the software space, NVIDIA, which is the clear AI winner in the hardware space, except like those kind of names. So be hyper specific on where you're going to buy in this dip opportunity, because I do think this is going to be a last dip opportunity for the rest of the year that we'll see like next year, but this is going to be the last dip opportunity of the year. So like be very specific on where you want to have your alpha in the markets for the next couple months.
Because again, rate cuts plus presidency, win, upside. So you guys, you got it. You got it here. Lock it in, write it down, shame us with it if we're wrong. Blast us all over Twitter. We won't be, so I'm highly confident in saying that. Guys, these are just market mechanics that you just learn over the years. It's not like this is the goal. You guys come here and you get the simplicity and ease of having two people that have done this for a number of years, just dissect it for you and give you the digestible pieces. Like when you go to a restaurant, you know what I mean? You're not asking them to cut the meat, you're not going in the back room and flaying a steak and then cooking it, are you? No, you order the food and you get it, you eat it. You come here, you order it, you get it, you eat it. That's what we do because we love you dearly and deeply.
And also, like, it's really important, like, to be open-minded. Like, this is like we've been saying a couple weeks now, like, in this kind of macro environment, like, you need to be able to wear multiple hats. I'm a long-term investor, growth investor, but like, I'm not going to be stubborn or unrealistic on what the current setup is in the market. So I bought some options and I hedged my portfolio. Like today, I first time look today, like, which is again a sentiment of like bloody day. I'm not actively looking at my growth portfolio every hour. This is the first time I looked at it because I have that long-term mentality. And I hope that a lot of you guys have that similar mentality where these kind of day like really red days doesn't affect you because you're thinking long-term. So today I didn't lose. I'm down $10,800 in my growth portfolio. My option for my SPY put was, wow, that is actually kind of nuts. $11,000. So I net positive $300 and I sold 25%. So like that just shows how important it is to hedge your portfolio when things feel frothy or you want to protect your usually gains. Like today, minus 3.6% portfolio day, but I actually was green today because of these hedges. Perfect example of why you need to have that open mind perspective on investing. Like wear multiple hats. Don't know your lane. That's the only way you can do it. Like you have to be versatile and you have to learn a lot of the tools. And last week we called out like there's a lot of ETFs out there or real strategies where you can capture income while it's going through volatile times to capture that increase in volatility and put in your pocket. So when things get normalized, you can reinvest that cash towards your high conviction names. Like you have to be open.
Agreed. Couldn't agree more. So really quick, while we're transitioning here and talking some other names, if you guys have any questions about that, like how do I manage risk? What do I go about? Like this is where your opportunity lies to post us in the chat and hopefully we can address some of them. So please ask questions. That's the only way that we know what you actually want to learn and understand. And if you don't, then you don't get it. So that sucks. So don't do that. So what's up? Let's get some shout outs here. We got Farouk, Porter, Yoda, Cools. I see you guys in the comments. Charlie. How you guys living? The Chag, of course. Latvian. Nice. I'm glad you guys are here. Good stuff. But again, whether you're watching on Twitter, YouTube, in the Discord, wherever, please, question in the comments. Hit us with it, and we'll get into it. So macro conditions deteriorated today, right? We're not in a great spot. Macro, not good if you didn't hedge. I will be first to say that I didn't hedge enough. Wished I would have. I expected, a couple points of drawdown. I did not expect to see 550 today, so that's a little disappointing. Wish I'd have been better prepared for that. I mean, we had such a strong day and such strong volume on the 30th, which is why this is kind of like they definitely hit us with a gotcha, bitch. And I was like, you did. You're right. That sucks. I'm pissed, but it happens. And across the market, you really saw a lot of this. Looking at names like Tesla, Apple across the board, you really saw the same sell-off. But again, what's interesting is like you look at Tesla today, didn't have that bad of a day. Very interesting. Little bit of pump fake, but at the end of the day, this chart has really ranged out and become a lot more sensible. Would you agree?
I mean, ever since end of July, it's just consolidating. There's low volume. It's just the 10-10 event move happened. And ever since August began, it's just consolidating. It's probably going to be in this range bound until October. And that's fine because we're about to be in a highly volatile market. It might be some like 5% correction in the market. Like this name is like showing relative strength. It's just nobody wants to sell it before this event. However, nobody really wants to bid it up as well. So like today, this morning, like it was the first name I caught my eye of like, wow, it's getting bought up within the first hour. Like it went up 2% green when everything else was selling off. Inevitably, it follows suit with everyone else, but like you can't ignore that. But I just really wouldn't. I just think it's not going anywhere. It's going to be 200 to 220, just like trapped in there for. It's been trapped there. It's going to continue. And Amazon, I saw another call out. Amazon showed a lot of strength today against the other Max 7 names, and it got scooped up at the end in the afternoon on Friday. So like that's a really interesting call out as well.
Agreed. That chart is one I'm glad you brought up because credit to you for getting those 150s, 160s. I mean, that was stupid. That was just dumb. I was not as well prepared as one was. Where did that go? 1 second. God damn it. Okay. So look at the rest of the market and then look at Amazon. NVIDIA dragging down 10%, right? Tesla range bound, doesn't look weak, but doesn't look great. And then you got Amazon that found more strength, I would say, than any name on that whole yen carry nonsense, right? Barely even drew down. And the little it did draw down, buyers were lined up with truckfuls of money to get it, right? You included. And everybody here, if you've been following the stream. Yet, I'm not hearing much about Amazon, even though the setup is clear as day.
I mean, a lot of people are not giving. First off, Amazon will be the leader of AI robotics in the next decade. Why is that? It's because, again, they're the king of cloud computing. Like they have the tech talent to make it happen. And creating this product, they have a perfect business to test it out. Their own warehouses. Like they have so many warehouses across the whole country. Internationally, they're getting exposure. Like they can test these AI robotics into their in-house warehouses, and it's going to be a win-win. Like validate the tech in their own product, margin expansion story in the warehouses. Like they're just not factoring that in. And I think right now it's just until that happens, where you see that AI robotics being priced in of like the potential leader in that thematic, like this might not go anywhere. But I really think it's needs more respect because the scalability of their AWS is unheard of. And a lot of people are just like brushing it aside because it's going to be, it's more cyclical and temporary because again, all the AI related investments is going towards compute servers and hardware. So they think it's not going to last. But like, again, I think cloud computing is here to stay, but AI robotics is what's getting me excited. Like, I don't think Tesla, like I love Elon, but like he's being really aggressive on how he thinks he's gonna be a leader in the robotic space. Love to see that happen, but Amazon feels like a much more realistic first company to solve it. And I think like looking at the chart, I like to use an anchored VWAP from the March 2023 bottom for
Do you want to
Amazon.
pull that up? Are you able to
Yeah.
pull that up right now?
Yeah, let me pull it up.
Pop mine down so you can get up in there. Ooh, Sandbad, I like this. I'm
Can you see
interested
it?
in this. Very interested in this. I think this is a great idea. Whoever you are, Sandbad.
Are you able to see my screen?
Sam Good, more so. Yeah.
Perfect. All right. So the reason I say that is let's move this volume shelf over here. This was the pretty big above average volume on the 2023 dip. After this happened, a lot of new buyers entered and bought this dip and took it to new highs. So I like to use that. All right, that's a great long term what the Amazon investors' behavior is, and it also worked over here. You saw the dip like briefly sold off there, but it was just V-shaped recovery. Like I like to use this as a long term buying opportunity. So where is that? That's at 145. I don't think we'll get there, but if we do, that's where I'm going to be really aggressive with my ads. But in more near term is clearly a lot of buyers came in during that market tantrum experience. So I'm using the anchor VWAP from this August bottom, and it got respected on August 28th during that dip opportunity. I'm going to be adding at 170. That's my next level on Amazon. I will be adding. So I have my price. Again, I have my plan. Long term, 145 aggressive DC on Amazon. Short term, I'm going to participate in a buying opportunity when it hits 170. Right now, it's a 5 or 6% position. I want Amazon to be double digits. I really think they're going to have their AI robotics business and as well as their cloud computing business is getting severely underappreciated. And I think that's going to change because sentiment follows price. And people are saying, oh, Amazon really hasn't moved all year. It's just been at this holding pattern. And as soon as it clears 200, once Bezos stops doing the selling program, you never know when that's going to stop. But as soon as it clears 200, it's going to take off because it's one of the undervalued Max 7 names. So yeah, that's I'll stop sharing, but like that's kind of what I have on Amazon. I think it's one of those opportunities where you just
I couldn't agree more. I think it's like one of the most underpriced opportunities in the market, like where you can't buy the other tech names, big tech names right now because it just doesn't make sense. I think this is one that does make sense to buy now, right now.
Don't buy Microsoft, don't buy Apple. It's Amazon, Tesla, NVIDIA.
Yeah, that's guys. That's what we're loading up on, and just pound for pound on the chart. I mean, you've seen strength here you have not seen anywhere else. I mean, obviously, COVID boom. It's online sales, but I think they withheld this drive down below 80. Basically, the market said COVID changed everything. We will never. It basically took Amazon from a place of like a large segmentation of customers to like now we have every customer. Anyone who wasn't on Amazon pre-COVID is on Amazon post-COVID. I would love to look at that data, by the way. I think that'd be interesting for us to pull up. Customer data from that transition of those 2 years, they had to have seen unprecedented growth. But beyond that, relative new high with strength and consolidation. You don't see this across the rest of the market. The drawdown on the yen carry day was minimal and almost forgettable for Amazon because we have our long-term trend strength, right? Dating back to 2017, this trend line is valid, right? It's telling us here's the part of our range. I don't even have this up. That's my bad. So I've been doing this on my chart the whole time, and it's not even pulled up because I didn't have it pulled up. So my bad. So here it is. Amazon showed strength that no one else has shown, right? Here's why. We have our long-term pivot point, right? This trend line has been validated time after time again. So extremely trustworthy point of price comparison. We came below that for just a brief moment, instant up. The market said, no. We're not. Amazon doesn't belong there any longer. Just so much as they did right here when we fell out of that trend line, our bottom dollar trend line that dates back all the way to 2014. So we are mapping out Amazon's chart from 2014, which means we have time on our side of quality data. We're not looking at week in, week out. We're talking forever, right? 10 years of Amazon price action tells us that it is extremely unlikely we will ever see sub 120, 130, 140 ever again. The market said when we came down in 22 on a terrible bearish year, we tested $80. The market said Amazon will not be here again. Pre-COVID levels no longer exist. There's only Amazon post-COVID, which again, I would love to see those numbers of customer acquisition, because I think that any customer they didn't have before COVID, they sure as hell got after COVID, which means once you're in the Amazon ecosystem, you don't leave. Stickiest product I've ever seen. So now here we are trading 170s, right? We've had a nice consolidation already all the way through, what is that, August of 2020, all the way through April of 20. So 2 years of consolidation here. We fell out because the market was shit, instantly climbed back up. And now here we are trading in the same range again, to where, to me, for Amazon, worst case downside, we test 145 again and we get a great buying opportunity. Best case Amazon, we explode and we test 240, then 330, 315, 330. That's kind of where Amazon is headed at this point, north of 175. So, yeah, that's the deal. So for Amazon, this is one that I will be looking at for LEAP contracts, long-term options that we can see it. You guys have seen my results. You know, I'm looking for a 2 or 3 back. I'm looking for an outsized return, 200 to 300%. On the move up. I will be posting those in the Discord for those with premium access. If you don't have it, go get it. This one trade will, it's one trade. I expect for this one trade to give me an upgrade on my car. That's all I'm going to tell you right now. I'm looking at this as fun money. So, Jeffy, run it up for me. That's just what I call him. He loves it. But yeah, look, it's Amazon. I think honestly, right now, we're really just seeing a valuation of like a distribution business. I don't even think we're weighing in on everything else, which is absolutely monopoly. How this doesn't get broken up, I don't know. And
Amazon's AWS, but you guys know I love the Rule of 40 score. It's the best way to quantify growth. AWS, which is their cloud computing, like part of their Amazon's business, they have a Rule of 40 score of 64. That's unheard of at the scale that they're at. Only NVIDIA has kind of blown out that rule of metric score. That's a much more cyclical business than Amazon. So Amazon's AWS alone has a Rule of 40 score of 64. So like I think that is like a 1.3, $1.4 trillion business under Amazon's umbrella, using the multiple that any kind of growth software stock or cloud computing stock would get in the public market. So I'm like, you're getting the e-commerce side of the business for free. And I think Amazon isn't really trying to make that much, increase their margins that much on their e-commerce business, because again, convenience is what they just want to conquer the world via Prime, and convenience is their selling point on that. But if they conquer AI robotics, and now you kind of have to value their e-commerce business as like an actual business that's going to add value to the fundamentals for Amazon. That's what I'm underwriting. Like that's a completely game-changing type of organizational move that they can make that's going to bid the stock up, because right now it's not getting any kind of bump on the value for Amazon. But if there is going to be an add value to the valuation for Amazon due to their e-commerce business expanding their margins without at the consumer's expense, it's just reducing the OpEx that's required for their e-commerce, that's going to be a significant tailwind for them. So again, cloud computing is here to stay. That AWS is the king, and it's only going to gain more popularity as AI takes off. But their e-commerce side of the business will also take off as soon as they solve AI robotics, which I think is going to happen a lot sooner than people anticipate.
Yep. I couldn't agree more. And here we are. So Amazon, lock it in. It's a great name. If you want the options trade, the long-term leaps, and all of our price targets and updates, jump in the Discord. Make sure you get it. Go to his bio. Get on his email list, because I'm telling you, moving on to NVIDIA, I think that there's going to be some very interesting research coming out in the next couple of weeks. And if you like stocks like NVIDIA, you definitely want to get it. What are you on the short reports? You've nailed those, right? 2 for 2.
3 for 3.
Plus 3 for 3 now. There you go.
Yeah.
So if you want to know which companies suck that you've probably been told to buy on social media, go to his Twitter, go in the bio, sign up for that. That list will always be free. If you want that information we're sending out, it'll always be free. It's just to help you, and you'll make probably more money following the list than you will paying.
Wait, let me see the short report from 2 weeks ago. I didn't even check how much it's down since I sent it out.
I'm pretty sure they've all hit north of 40%.
Yeah, the first two definitely have. This one, just from last week's reports, is down, 8%. And this is a popular FinTwit stock, so that's really interesting. Yeah. I hate how much I like writing these short reports. This is the first time I ever did it. Like, I don't like publicly talking poorly about stocks, because it's a game of like selling and buying, and a lot of people are bullish on stocks, and I don't want to put them down by talking bad about their stock. Like, I think I want everyone to make money, but these short reports, like, I think it's important to call out the pretenders, or the ones that are being valued for perfection, so you go hold those bags. And I think I'm going to be more aggressive about like these short reports. Like, I would love to do 1 or 2 a month, and I think that's my goal, on creating 1 or 2 short reports a month, because I do have a list of 15 names actually that I think are losers, that aren't being priced that way, and I want to prevent people from buying them, giving my take on why I think they're losers. And hopefully, if you guys read those short reports, like, it helped you come to that conclusion yourself, or you realize where I'm coming from, and maybe you can frame the way you when you invest in stock, we can frame like the half glass empty side of that investment, and that's a really important way to like be an investor. Again, be open-minded, wear multiple hats. Like, I know if I'm a bear on Snowflake, I know why I'm a bear. If I'm a bear in Palantir, I know why I'm a bear. Like, you have to know both sides of the arguments to make the conclusion on why you want to invest in the company. You can't just be so gun-ho, like, this is exactly why I'm buying it, everyone else is wrong, there's no doubt, like, there's no reason why it could go down. Like, that's just delusional. You have to be able to factor in both sides.
Yeah, I couldn't agree more. I'm just trying to map this out here based on what we've seen.
Oh, we can't see your screen.
NVIDIA's really got 2 options. No, I didn't want to distract from the message, because they needed to hear that shit. If you want to know which companies are basically feeding you a load of bullshit, and learn to understand, I mean, that's, to me personally, I'll just say this to you, what I've gotten is like, I have a better understanding of what they're really saying, the read between the lines, since hearing it from you, than I ever had before, where stuff would just go over my head, and I see like an 8K and I read it, it's like, oh, that sounds good. And then, but you're really, it's like, hey, yeah, that's going to increase our overhead by 2.5%, which means our margin's gone, which means for the next couple months, we're going to be priced to the downside. Like, we're certain things, guys, that you just wouldn't have thought of, that he has professional experience in doing, that he's giving you in a distilled, like, for me, layman's terms. Like, talk to me like I'm 5.
I mean, unfortunately, I'm glad you said. I appreciate that, Austin. I mean, my whole career has been digesting data and creating narratives of C-suite. So, like, in preparation for important calls. So I know, like, I was on the other end of it, providing the language that they can say without getting in trouble, but also communicating somewhat of a narrative that they want to do. That's a lot of fluff. And because I was on the other side, like, I know what is clearly fluff and what's clearly BS, and that's like that's way misleading. Great example. I think SentinelOne's an interesting cybersecurity name, but when before CrowdStrike was reporting, like, all I saw was SentinelOne's going to eat their lunch. They're going to eat their lunch. They're going to be a major player in endpoint security, and like that earnings report, hearing the CEO talk is like this. I was live on the Spaces. Like, this is all fluff. This is no substance. All the language he was saying is a salesman pitch with nothing to back it up. And in the Discord group and in my subs, I called out, like, there needs to be something tangible in SentinelOne's earnings that's going to make me actually fearful that CrowdStrike is losing market share to them, and they're going to be one of the biggest beneficiaries from that outage event. And one of those things is if he says that we are increasing our hiring due to the demand for the endpoint security, that was like, all right, you can validate that comment by looking on Google, see their positions being open the past couple months, ever since the outage or the past couple weeks, or you're seeing like increased position on LinkedIn. Like that's something that can be validated via search. None of that. All he said was like, we're getting a lot of intake calls because people are upset about CrowdStrike. No way you can back it up because that's all subjective. Everything he was saying was clearly subjective and so vague, super vague, that it got me bullish on CrowdStrike because they were saying everything that was all bark with no bites. And we saw what CrowdStrike's earnings was. They minimal is $60 million impact for the next 6 months after the outage, and they landed multiple major deals after the outage, and the market share was a slight dip. And you can make the argument it was just people got fearful of it, and they're going to probably come back after they entertain their competitors. Like I don't know what it is, but they had minimal market share loss, and that's why you saw them going from like down 4% after hours to skyrocketing 12% swing right away because they did not lose that much market share. But in Sentinel One's call, like that was my indicator of like their meat, like that was just all fluff. And Palo Alto, there was a lot of fluff as well. It's like if those two competitors aren't specifically backing up real statements on how they're taking market share away from CrowdStrike via language that can be backed up by research, I think CrowdStrike's fine, and that's exactly what we saw. So, like, again, a lot of people out there say like they have all this knowledge and experience in industry, and like they've been around. Like you can look me up. Like I've been in those calls. Like I've done that work. Corporate strategy director. Like that's all I do. Like that's what corporate strategy is prepping C-suites on strategic initiatives and communicate that narrative. Like that's all I do. So I just want to add that caveat, and I'll pass it back to you, Oz.
Oh, I love it. Sorry, I was just making a little post on Twitter, giving you a shout out because I just realized like those two. I mean, I took one of them and I made 40%, and I will say on the other one I went options, and I'm hold on a second, let me just find out. The last one, 25% overall already. I went options on the last one, 25%.
Nice.
Boom. So you made me a couple $100. Thank you.
Woo!
Sweet. So there it is, guys. That's it, and that's all. Some of these companies will mislead you, and maybe not intentionally, but they don't write it for it to be sincere and easy to understand. But let's focus now over to NVIDIA. Antitrust. Scary.
Timing of it could not be any scarier on a 10% down day. I mean, first off, if you guys don't know, NVIDIA, the amount of market cap they lost today was the most in history of the stock market. Like today, they lost half of a Tesla's worth in valuation. Like it was $300 billion gone on essentially no news. It was just a repositioning from tech to defensive. And NVIDIA is the poster child of tech in this rally. So like they got the grunt of it. This DOJ news could not come at a worse time. As you guys are aware, like I went hard on NVIDIA during that market tantrum a couple weeks ago. Cost basis is at $93, I think it was. And I sold 30% at 130 and 126, 127. And I told Austin after that, when Austin, I think, was on a flight, and he hit me up and was like, is this NVIDIA buying opportunity or not? And it's like, I was looking for $34 billion next quarter, and they didn't get that. And their guide was in line. I was like, I think there's a near-term top. I'm going to be selling another 15%. And we had a really aggressive, I didn't anticipate a 10% pullback in one day, but I do think we're going to retest that anchored VWAP from January 2024 is a clear trend line for NVIDIA. And right now that's at $93. I think mid 90s is the buying opportunity for NVIDIA. And this DOJ news is not going to go away any soon. This is not like one of those bark no bite, because this feels like the commentary on it, where they're preventing from when people leave and use other chips, or penalizing them due to the ecosystem that they created. And it feels like they know information about the Blackwell ecosystem that's going to be released soon to the public that we don't know. That's going to become such a monopoly for NVIDIA that it will be impossible for any other chip makers to really participate in this thematic. that again, DOJ hates monopolies. NVIDIA is becoming such a monopoly because they aren't just a hardware chip anymore. They're creating this ecosystem, a software component in their ecosystem that's becoming them owning every stage of the AI life cycle. And that's kind of scary because nobody really knows the ceiling of AI yet. All we know is big tech players are spending billions of dollars every quarter on it. And we're seeing a consumer side, ChatGPT is changing the game, and AI is creating such a simplification in our lives that it makes sense it's going to stay. And in an enterprise side, it makes sense that it's going to remove the tedious task. It's going to dilute the FTE counts, head count for a lot of the companies. Like all the applications of AI make too much sense for it not to stick and get bigger and more popular. That if NVIDIA on their Blackwell chips creates such a sticky ecosystem that's going to be impossible for competitors, they're going to prevent that from happening because that's just the way the US is, the DOJ is. That's fine. But this could be a headwind for the stock. And especially when you saw that multiple times they could not get past that 130 and that earnings reports before the earnings, and that earnings report wasn't a good enough numbers for the catalyst to break through that 130 and all-time highs, that this might be the time we are in that middle of that S-curve type of growth. I don't know. I really don't know yet, but it feels like it is. And I want to reiterate, this isn't because I'm bearish on the stock. The story is still intact long-term. But when you move as much as NVIDIA has moved in the past couple of years, there needs to be a breathing period. It needs to be the case. This might be that breathing period. And if that's the case, it's accumulation season. You just accumulate. That's all I'm doing. Like Amazon, I don't think it's going anywhere. Tesla, I don't think it's going anywhere. NVIDIA, I don't think it's going to break 90 to 95 bucks. It's just going to be consolidating. And that's just like, you have to have the mentality like the days of them growing top line 500% year over year, or them going up 200% 1 year. I think those days are over. However, I do think NVIDIA will hit $10 trillion by 2030. And if that's the case, there's plenty of runway right now from them being worth like $2.7 trillion to hit that 10 trillion in like a matter of 6 or 7 years. That's still a multi-bagger. So just have that long-term mentality. But right now, there is some short-term headwinds that I don't know if they can get through and might take some time.
Yeah. And I think that guys, having that longer term like vision here is what matters. Like this is the trade everyone's already looking back and saying, how did I miss it? This is going to be the same trade that in another 10 years, everyone's going to look back and say, oh my God, I missed it. Even if you didn't have it. I mean, let's be honest. I mean, just not trying to rub it. If you missed it, you missed it. But I mean, guys, we're buying this at where it's at now, around 43 bucks. So no, even more. It was 2022, excuse me. So where's October? So we were buying this at technically $13 to $17. That's when we were buying this. When if you're in the Discord, that's when you got the pick. We're trading significantly above that. So my cause for concern is much less because this is a 10x position. 10x my money. Great. Yanked a bunch out. Now I'm playing with profit and I still have a sizable position. What he's trying to explain to you here is like, yeah, there's short-term drawdown, but in the long run, buy the dip. If this is a name you're willing to hold for extended period of time. I mean, to me, this is a I don't know how he feels about this, but this is like a 10% position, at least 5 to 10%, because it's going to outpace everything else. You now need it for everything. And it doesn't even get started on the introduction or advent of like, when we start getting into that really kind of cross-compatible world of all the new audio-visual stuff they have, right? Like, forget about like the Apple, what the fuck is it called? The goggle bullshit. Forget about all that bullshit. Think more of like general utility and life experience. As we start to get into needing some of those visual elements to be rendered in real life, there's one company that's going to do it, period.
I mean,
they're going to be the consultant on how it's done. Then they're going to be the provider of who actually does it. They're going to be the manufacturer, the distributor. They're going to win.
Yeah, just think about NVIDIA as like when Apple, the reason Apple took off so much is because of the App Store and like all the applications that got generated at the App Store. And they slowly became this growth engine into a more of a, not defense, but like it's just like a money grabbing machine. Yeah. NVIDIA will be the same thing on what they're going to do. Like this hypergrowth stage is eventually it's going to pause, but it's always going to be that slow grind up like Apple's been the past 20 years. Because if you want to create any kind of consumer product, it's going to have some kind of AI chip now infused into it. If any kind of enterprise AI product, you're going to have some kind of AI chip infused to it. Like what the enterprise consumers in AI is going to go straight to NVIDIA, just like any kind of phone application or gaming application to gamify, like any application in life had to go through Apple. It's like those Apple and NVIDIA is going to be the stickiest component of every consumer's life. It's here to stay. It's not going to go away. It's all about, though, now stock price and companies long-term thesis is going to be two completely separate things. And there's could be a near-term headwind on stock price, but long-term, the company's well intact, is only going to increase and increase. But I do want to say, like, another news hit today. I don't know if you saw it. AMD poached a VP of AI from NVIDIA today. So that was interesting because the new position in AMD was a lateral position. It wasn't like a bump. So that was like, whoa, that's very interesting. And this comes on the same day as this like DOJ thing. And again, once you become so powerful so quick, it's capitalism is brutal, but the US will break you if you're going too fast, too quick, because they don't want you to become more powerful than the US government. That's just how it is. And if that breaks, it's going to cause a massive headwind of like lack of funds towards NVIDIA, or they're going to fund NVIDIA competitors, making some kind of duopoly or competitive landscape. Like that could be the case. And if so, there might be better opportunities, but I don't, again, this is all narrative, all story, but that's a really interesting talent grab from AMD, especially when the position it was a lateral position. So that's something to call out. And I just want to mention, like, I also do think Intel, it's a misrun company and CPUs are dead. However, their foundry is kind of important. We can't just solely rely on TSM. So the government, US government, wants to take away a lot of the NVIDIA power. Maybe they use a lot of funds to make Intel some kind of component of the GPU space, or like push their foundry business to next level. Like, I just think there's gonna be a lot more competition if NVIDIA increases in the power that they've been at the pace they've been at.
Yeah, I mean, they got to figure out how they work within the system before they give them the power to grow. I mean, look at Facebook, case in point. Hey, we're going to call you, and you're going to give us whatever we want. You're going to really just kind of do whatever we want. We might do a little election interference, might do a little snooping, but as long as you want to be in business, we expect you to comply. And I think Zuck, this is one of the first times I saw Facebook go public with anything, right? And him talking about how basically they regret their actions in the COVID misinformation. You know what I'm saying? Like, they regret their actions in the COVID misinformation thing. I don't know if anybody else saw that, but he basically said, like, we had to suppress information about COVID-19, which we really regret and we wish we wouldn't have complied with. And that was at the behest of the U.S. government. So again, Shai's making a great point that everyone needs to think about. At what point does NVIDIA become too scary to continue to grow? It's like, there's so many different layers to this, you guys. It's not just, do they sell chips? Do they make money? It's like, can they play well in the sandbox with who is deciding who's in the sandbox, right? The overlord of said sandbox, which is the U.S. government. The U.S. government's just a business, right? Much like the mob. You either pay your tariffs, give them access, control. Like, you have to be lending power in some capacity, whether it's dollars, insight, data, anything else. And if they're not, then yeah, you might see other players, AMD, Intel, see a little bit of bump. Because I mean, the U.S. government moves a lot of weight, man. I think that at the end of the day, if like there's large scale trip orders, like say we start to introduce some of this stuff into schools, who are they buying it from? You know, some very large, which I would argue would be billion-dollar purchases. If they start moving through these other entities, that changes the position, changes the game entirely. I think it changes the board itself, which then, yeah, might not be a bad idea to hedge a little bit there and be open-minded to those things. So, all right, let's get into it. We're at the top of the hour. Let's get into some smash or pass. You guys drop the tickers, and we do a quick eval and tell you whether or not we like it and want to take it home. there was a suggestion recently made to me. I'll get your opinion on this, where people said, what if you and I did like we each put in a couple $100 to throw into some of these names? We each pick one. And every week we measure it pound for pound, see how she goes.
Say the first part again.
Like for Smash or Pass, everybody gives their tickers, right?
Yeah.
We each get to pick one to throw $500 in, and we got to put it on the line, throw it in.
I like it.
And just week by week we measure it. I think that could be
so you sell that position the following Monday.
We're done. We're out.
I got that. Okay, I like that.
So we need you guys to put some like good names in there, so it's not just garbage. But yeah, so pop those tickers in the chat, as many as you want. Just all I ask is that they're separated, like one per comment, so I can pull it up on the screen. So we're gonna get right into it. Mr. Cool's here. One that I know everyone is.
I can pull up my chart for this one right here.
Go for it.
So this is gonna be where I'm purchasing my $500 already. It's gonna be very hard to surpass this setup I see right now for Celsius, but I do think this is gonna be the one I want on the chart. Yeah, I'm pulling up right now. So Celsius, it's brutal, but look at their weekly. It's taken off like crazy. Look where it's settling in. This is the 200 SMA on their weekly chart. It will not break that multiple times. I just think this is where it's gonna. If it breaks this trend, I'll get worried. If so, let's see. Where is
right about there? I think you're right there.
Yeah, I mean, look at this volume shelf too. Like this is the point where it's going to bounce. So like I think this is an absolute smash, and this is probably where I'm going to put my $500 on. Where I view Celsius as more of a trade, not a long-term investment anymore. But I think it bounces here, and again, magnet towards $50. So look at this volume shelf. That's going to be resistance, which was the previous supports right here. Whoops. I just think this is going to be probably a whoop. And then we'll see from there. But like, I just don't think it's going to break here until there's a catalyst in the fundamentals. But this is right here. It's a $13 move. So you can make 25% profit right there.
I like that. All right. So that's what you're taking. You're doing it.
Yeah. And unless you guys send me a better one.
I didn't say shit. I'm waiting till they all come out first. All right. We can look at this really quick. Quick preface before we talk Bitcoin miners. I'm a big just buy Bitcoin. Why do I want to add in the additional element of risk of how a public company manages their ability to mine it and manage their business? I think there's far more upside appreciation and safety in buying the underlying asset itself. So that being said, CLSK, this is an easy one because below 11.23, you're looking at $7-8, and in which I think it is not a terrible buy opportunity for a little bit of a growth trade. So it would get a smash there, but it's getting a pass here. We're mid-range. We're in purgatory. That's no man's land. We're not looking good. We failed this setup right here, which is where I went bearish, below 16.5. That's when I think we lost out on this chart. Now we got our little poopy head and shoulders there on the daily. And if you go to the monthly to look at a better, long-term vision here, that's not a good look. Now, some would argue, okay, this is the handle of the cup, sure, but I think we're still heading to $7 before we find that upside. So that's going to be a firm pass for me here. On to the next one, Venkat, CCJ. I mean, unless you're taking this one, but I'm sure as hell not.
No. I mean, Bitcoin. I will say, crypto showed strength today against Bitcoin showed strength against the indices today. So, like, do what you want with that information.
What the hell is this Cameco? That feels like oil or some sort of like boomer related commodity, doesn't it? Like we're Cameco oil. Come on in. Corporate headquarters located in Austin, Texas.
Let's see what it is. CCJ. Oh, it's commodity. I mean, oil's hitting a 60 handle, which is really interesting.
So it is. It's uranium.
Oh, I think uranium's really interesting because that's gonna be I'm not a commodity person, but like that's definitely something that's gonna have supply shortages that make the price go whoop.
Yeah. So I don't think this is the name to capitalize on it. And then at the moment, I'm giving this a pass because we got a little more downside, but it is holding overall trend from 2020, which I would say is a good opportunity to buy right here. Look at how it's just respected and abided this trend line for 4 years now. You got to give it some credit. And this might be a buy the dip opportunity. So this was a good find, Ben Cat. Good find. Good find. I don't hate it. It's a smash. It's just we're not there yet. I will say this one might be on my list. I'm trying to understand the upside here, but this one might be on my list. Okay, let's keep going. We got GEHC. Been looking at it with sector rotation into healthcare. Oh, GE's healthcare. When the hell did this happen? What is this?
Yeah,
is
they
this
spin
their
off.
like?
I think
So
it was like
GE.
the game this year, yeah.
So wait, what? So they're in house now?
Yeah, no, they had a healthcare in house that they spinned off. Like they spinned off a couple. Again, essentially, Intel is probably going to do the same thing. Like when it's like a company that's been around the block for a while, and like there's certain segments of their business that's like where all the investors want, and the stock price is struggling a bit, they're going to spin it off. And yeah, healthcare is a defense industry, so like I'm not surprised. Like it's probably doing well when there's a rotation out tech towards defense.
So Stocks Buddy already gave this one a buy, 68, went as high as 94. It's a nice 50%er right there. And now it's still trading above Stocks Buddy's calculated the support 75. I would tend to agree. Yeah, I did not know they were spinning that shit out. It's just a great way to just spin up a couple $100 million in fresh money, even though nothing's changed. Like, think about it. When they go public and they do the raise, they're just giving themselves liquidity and cash now.
It's stock engineering,
dude. So we will be going public here at PB Alerts, and dude, I mean, Jesus, like that is the way to go to get rich, man. Damn. All right, let's keep it moving. That one's getting a smash from me. We got the defensiveness, and
Broadcom, AVGO. So they're reporting their earnings on Thursday. They're very expensive. So
yep.
This earnings cycle has been a theme. Look to the left. If you've ran up, you better have absolutely godly like numbers to continue that run up. NVIDIA's a poster child of that. They had great earnings, and look at their price action. Broadcom, I think it's more on this pass. And I also do think there's some disruption in their network with what NVIDIA is doing right now in their ecosystem. I'm not saying Broadcom is going to go away, but I think their valuation will return closer to the mean like it's been than what it is right now, which is way overextended. Like it's very expensive right now.
Pookie, drop that link to Stocks Buddy. I got to give Stocks Buddy a little credit there, dude. This was a hell of a trade. I love the Stocks Buddy on the monthly. That's like exclusively pretty much how I use it. Look at that 53 buy signal to 190 in 1 year. Jesus. Madness. Makes me question why I do any research at all, and I don't just flip through these monthly charts. Dude, sometimes I do think that. But yeah, if you don't have it, hopefully somebody could put give these good people a 5-day freebie. 5-day free trial on the house. Enjoy. All right, let's keep going. Who's next? We did Avgo. I would agree, too expensive, too much up in 1 year. I'm not saying the business has changed, but I don't think there's meat on the bone to really capitalize here. Porter, IonQ. I'm not gonna lie, putting our money into these makes this smasher pass a lot more fun and interesting. Now I'm way more tuned into it. This is gonna be interesting.
Long term, I do love their tech in quantum computing, which is the next frontier after AI. However, like if there is going to be a sell-off in small caps, this is not going to be doing well. And it's going to be losing money for years and years. Great tech, but like this quantum computing, genomic names, like if there's sell-off intensifies in IWM or small caps, this will also be a victim of that.
Yeah. And I think, $3-4 can consolidate for quite a while. Just so you
Oh,
guys
I
know.
think under $5 is the no. Like, this would be a great ad under $5 long term.
Yeah, but I would also say for names like this is inventive, whatever, small caps in general.
Yeah.
You start playing with that $1 to $2 stock price, regardless of what they're doing, regardless of their market cap, doesn't matter. The market starts getting scared and shareholders start pushing. And what happens, guys? Reverse split, inevitably, if there's enough sell-off. And when that happens, look at your money as 90% dilution. You will lose 90% of what you had in there. And then it may run, but then it has to run 180% for you to even break even, which means it has to run 250% for you to have a reasonable return. So with anything small cap right now, that's the one caution I would give, is that no one in this market is in any way safe from the reverse split restructure, the debt, the share count, everything. Like, remember, there's an engineering component to this as a business. Like, I look at it as public facing business, stock. Those are almost two things. And there are times in which public facing business is doing great. Hell, we've worked with a lot of those companies where cash on cash, their returns are 3x what they were last year. Gross and net receipts are up 100, 200%. Yet they're going to the OTC because nobody bought the stock. So, like I said, they can be totally disconnected. So always remember that with small caps. I cannot encourage that enough. Please, God, always remember that. Never too much small cap exposure. It's always a PE lotto win. Like, look at it as like I throw it 10. If one of them hits, it pays for the rest, because small caps can be the most rewarding, but also carry the most risk for that reason. I don't want to see anybody get beat to death. Someone left this comment. It's like Cristiano Ronaldo's and Lionel Messi's son, I'm guessing, because it's both. They had a son. I don't know what NADA is.
I don't know either. NVIDIA, maybe he meant?
Oh, maybe you meant NVIDIA. So if you want to reiterate that question, that would be helpful. Let's get it. Tammy, how you living? I love that you're always asking me about these tried and true names like Monster Energy. That's just like absolutely crushed the market. And like, I'll be honest with you, at no point did I ever think about buying the stock. Like, over the last 10 years of looking at the markets, at no point did my mind ever go, I wonder how Monster Energy's trading, or I didn't even consider that as a potential contender for getting some of my money. Which tells me I have some biases I need to address, because, I mean, God, look at this win. Just mortgage crisis dominance, dude. I feel like my world has been split to pre and post mortgage crisis now. That's a new thing my mind does for some reason now. It's like pre.
So I will say Monster, there is some scary things that are happening right now, and some commentary that occurred from the management recently where it's a recession-proof business. They've gone through multiple recessions, as Austin has called out. However, they're actually having declining revenue. And they're saying this is a new thing for their business, and they need to figure out what's happening. That's alarming to me. Again, I'm on the camp that consumers are going to be going to a bad recession.
It's not on cost. They're not losing on cost. It's preference. Don't want the shit. Yeah. I don't want to have all those chemicals I can't pronounce.
That's the thing. Yeah,
in my body. I just don't.
Yeah, I think it's like they're an inflection point on the taste that the consumers are actually wanting. They want pureness. They want like tea extract. They want like the actual healthy stuff.
They want Celsius.
Yeah, or those health. No, Celsius isn't quality. Celsius is crap still. It's just the healthiest of the crap. I think
the people that will measure on cost are going for the rip it. That's the thing where I think they lost. They don't have like there was some brand like the 08, 09, 02, like 2010, like music scene, like the Warped Tour kind of scene. They crushed it. They were ahead of everyone. They were genius. They were there. Everyone was loving it. That's over. That was a genre, not that music, but I'm saying that time period was a genre where Monster was edge. Monster's now mainstream. Like, weirdly, if you talk about like trends here, I just learned this from my 13-year-old that like being religious is like the new rebellion. Like, yeah, I go to church. You know? That's rebellion now. How
That's
wild
wild.
is that? That's like the rebels, like for me, it was like stoners, burnouts. Like that's the new that. It's wild, dude.
Mm-hmm.
That like
That's crazy.
wearing the cross or whatever insignia and like going to church, temple, whatever. Like that's the new like I'm an outcast. Like it's crazy, dude. But that goes
The,
to show you that like times have changed and brands like this, I don't think can weather that because they were predicated on an idea. And you're Mr. Moat, right? And I think that idea was their moat. Well, they won on cost too. Like they won on youth, they won on cost, they won on genre and brand, right? Like ideology. All of
well,
which the age is discounted. We were the age group that bought all the Monster. I don't drink it anymore. Do you?
no, but I also do think that like, millennials, like every generation has a theme. Millennials was about efficiency, optimization, like whatever we can do in our lives to maximize our lives. We don't care what we put in ourselves, like Adderall, energy drinks. Like we're going to take it to get there. Gen Z is not the case. They care about what's in their system, like work-life balance, feeling good inside, and not reaching your max potential. Of like, doesn't matter how I'm gonna get there at all costs. Like I'm just gonna get there. Gen Z and even the Alpha generation ahead of them, which I think your kid is in, Os, they don't have that belief at all. They care about like, I want everything to be balanced. I want to have my feel good inside, and if success happens, it will happen, but it's not going to be at the cost of my body or my mind's health. Like that's the difference, and I think Monster probably
Yeah.
missed that generational switch, and now they're
Yeah.
lagging. And Celsius, like they have that label of like the healthy energy drink, but like inevitably, like they need to do something on top of that that's actually showing purity and health. Like your religion angle, Austin, like there is an angle of like that's purity. Like religious does purify a lot of people that
Yeah.
falls under the theme of feeling good inside. So it makes sense what you just said with your kid. Like know the
Ooh, it
themes of
does.
generations.
Ooh, breaking it down, it does. And so he is, I just looked it up. He is the like second to last year of Gen Z, which I feel bad because he would always argue with me. He's Gen Z. I'm like, dude, you're an iPad kid. You're out. There's no way you're Gen Z. And I just wouldn't let him have it. He's like that skivvy toilet bullshit and like all that weird stuff, dude. Like the worst parts of the internet. Just the sad parts of the internet. I think the alpha generation, it'll be interesting. And then you see a recycle because like my other two kids are 3.5 and then like 1.5, right? And I'm trying to think through like how they're being raised, right? It is I think it's a lot more balanced of like, yeah, I let them watch some TV and shit, but they're not parked in front of the TV. There's like a difference. There's just a healthier balance. Like, yeah, they eat some garbage, but like most of what they eat is pretty healthy or like organic and just not toxic and cancerous. Sad as that is that you have to pay more to avoid that. Like I guess State of the Union. But I think it's a great point you made, and I think to sum that up, bye Monster.
They're gonna have to pivot 100%. Coca-Cola, Pepsi, they're all gonna have to pivot. Like
Why they're buying bubbly and they're buying all these.
yeah, it's like the
I stopped
gut
drinking pop
healthy
when I
soda.
started drinking that, dude. So we're gonna get real. There was a sad, pathetic moment in time in which I drank like almost a 2 liter of Sprite a day. Like peak COVID, early COVID, I was pounding excessive amounts of like Sprite, and I didn't know that those bottles were like thousands of calories, like a whole day's worth of calories, and that's without eating anything. And I was like, man, I'm just putting on weight. What the hell's going on here? It's because I was drinking my fucking body weight in Sprite in a day. And basically, I had to like taper where I would mix sparkling water with Sprite and I would slowly put more sparkling water because that, dude, I'm telling you, that fructose, man, that stuff, that keeps you coming back for more.
100%
Real hard.
addiction. Yeah, it's a low key addiction. Sometimes.
Every time I drink a Diet Coke, I find myself like wanting, like at dinner or something, it's like somebody say, "Oh, I got Diet Coke. Okay, cool. Some caffeine, whatever." All of a sudden, I am interested in dessert. I don't like sweets. But if I drink like Diet Coke, and I've read that after it happened, I was like, man, I wonder if this does kind of influence your receptors. Like it will literally push you towards sugar. Whereas I don't usually consume sugar. So it's like, it's crazy, man. All right, so let's keep going and see what other ones you got here. But Monster's dead. Bye-bye Monster, unless they significantly change their business. I'd be interested. They should just become like a lifestyle clothing brand, dude. I think they could win that way.
We'll see what McDonald's does. I think McDonald's will be the first brand to see like what the new initiative would be from like those OG ones.
How cool would it be if McDonald's died?
I think McDonald's
would be awesome. And then I want to know what they're going to do with the real estate. They're not going to go away. They're just going to turn it into something else.
Yeah.
I wonder what it'll be. Commodities, because it's energy. This chart looks post-IPO. Post-IPO bottom is a fun place to be. But, again, I'm assuming that we're going small cap here at this one. Let me look up what the hell they do. IREN. This is also uranium. Are you a uranium guy? Oh, financial capital markets. Australia. Oh, forward PE of 7. Current price targets from JP Morgan. No, 650. Cantor Fitzgerald 7. Bernstein outperform at a $26. Cantor Fitzgerald upgraded or resumed, to a $23 price target. H.G. Wainwright is upgraded to an $8 price target. Interesting. Is this like blockchain related? I see a little bit of news mentioning blockchain and some other things. 1.3 billion market cap. We're not even talking small cap here. Okay. Oh boy. What do they do?
I don't know. Jeez, I'm looking into it right now. Yeah, I don't know. This is an interesting. I don't know how much exposure in.
All right. Well, yeah, I don't know. This one's interesting though. This chart is you don't see my chart, so sorry. This chart is actually pretty interesting on the monthly here. I don't hate it. Post IPO, so it looks like we have this one didn't go up, but I do think there's room here to test $17. And if you could buy trend support with a hard cut, this might be it. This one might get my money, dude. The setup I just need to understand what the hell they do, but this one's interesting. This might get it from me. Very interesting. All right. I'm trying to look through one or two more because I got to jump off here in just a minute. Borges, what is your guys' total portfolio? Where can I track and spec them? Shay on his Twitter under the same name you see him as here. Mine is kind of everywhere. It's on our Facebook groups and our Discord. It should be on our Twitter feed as well. So you could see them both there. All of our stuff, full transparency. I want you to basically, we're just showing you what we do. So that's where you can find it. I'm just trying to look and see if there's one more big one that we could get into. Oh, it's a Bitcoin miner for IREN. So, So someone here said that you need to buy CrowdStrike and sell Sentinel-1.
Yeah, I was from the get-go, from the outage, all I said was like Sentinel-1 will not take market share away from CrowdStrike. It might take the smaller $5 million deals, but their endpoint security is so much lower than the quality of what CrowdStrike has in endpoint that at the end of the day, quality matters, and especially in cybersecurity, that Sentinel-1 just going to get acquired and go into the sunset from some bigger player who wants endpoint in-house cybersecurity. I think the biggest headwind on CrowdStrike isn't Sentinel-1 or Palo Alto. It's the Googles, the Microsofts, like creating their own cybersecurity platform that's in-house to prevent what happened in the outage. And in order to do that, they're going to try to acquire the younger endpoint security names like the SentinelOnes, the Wizzes, like that's the biggest headwind for cybersecurity for CrowdStrike. But again, that's always been a headwind for CrowdStrike. Like Microsoft is always going to outperform them, and now CrowdStrike has a bigger market share in endpoint security than Microsoft. He missed out on this massive move. So SentinelOne is never going to be in tier 1, but just know like buy up for quality, and that's what CrowdStrike is.
All right. So again, we'll be live Friday's premium only stream where we will be executing some trades. We will be diving in on some good picks. We will be answering questions in our small group session. We will be trading live and doing it all right in front of you in the Discord. So if you're not in there, get your access. Make sure you go to this man's point to him. This man's link in his bio for that email newsletter. I mean, the short reports are fire. I've made money off them already. The picks and the analysis and the earnings, kind of just earnings readout is, I think, worth its weight in gold, and it's free. So don't be dumb. And yeah, that's about it. Thanks guys for coming. We appreciate you being here. We'll be back next Monday at 5 o'clock Eastern, and premium only stream is there. If you got more questions, come on back or just hit us up on Twitter. I love y'all. Stay blessed now. Bye-bye.